Right now, there are millions of Americans who are going to open their next Social Security payment and feel something they haven't felt in a while. Genuine surprise. Some of them are going to see more money. Some of them are going to realize they've been missing out for years and didn't even know it. And some of them, the ones who don't take a few minutes to review what's changed, could find themselves confused about their payments, their records, or even their eligibility going forward. And here's the thing, the Social Security Administration has made some of the most sweeping, far-reaching changes in decades. We're talking about changes that affect retired workers, disabled Americans, widows, widowers, public servants, and people who haven't even filed yet. Every single one of these groups has something important to check. So if you or someone you love depends on Social Security, or plans to, stick with me, because what I'm about to share with you could seriously affect your financial future. Welcome to Prime Move Guide, the channel that helps real Americans navigate real money decisions with clarity, confidence, and zero confusion. I'm glad you're here today because this one genuinely matters. And if you're not subscribed yet, go ahead and hit that subscribe button right now. We cover Social Security updates, retirement planning, and financial changes that affect everyday people, and you don't want to miss what's coming up next on this channel. Now, let's get into it, because there's a lot to cover and every piece of it is important. Let's start at the top, the number that most people are going to notice first, and that's the 2026 Cost of Living Adjustment, or COLA. The Social Security Administration announced that benefits for Social Security and Supplemental Security income recipients will increase by 2.8% in 2026. That sounds like a small percentage on paper, but when you apply it to the roughly 75 million Americans who receive some form of Social Security benefit, you're talking about a real, meaningful change in monthly income for a lot of families. For the average Social Security retirement recipient, that 2.8% works out to an increase of about $56 per month starting in January of 2026. Now, that might not sound earth-shattering on its own, but over the course of a year, that's nearly $700 of additional income. And for retirees who are managing tight budgets and trying to stretch every dollar, that kind of bump makes a genuine difference in how far their money goes. The 2.8% COLA for 2026 is actually higher than the 2.5% adjustment that was applied in 2025, so this year's increase carries a little more weight than the previous one. That said, it's still slightly below the 10-year average of about 3.1%. The COLA itself is determined by something called the Consumer Price Index for urban wage earners and clerical workers, which is a mouthful, but what it really means is that the Social Security Administration tracks how much prices are rising in the real economy and adjusts benefits accordingly. The goal is to make sure that inflation doesn't silently eat away at what people receive month after month. The system isn't perfect, and a lot of seniors will tell you they feel like their costs go up faster than their benefits do. But the COLA is the mechanism designed to address that gap. Now, for most people, these increased payments started automatically in January of 2026. There was nothing they needed to do to trigger that. But here's where things get a little more nuanced. If you're also enrolled in Medicare Part B, and most Social Security recipients over 65 are, then you need to understand how the Medicare premium increase affects your net gain. The standard monthly Medicare Part B premium rose by about 9.7% for 2026, bringing it to $202.90 per month, an increase of about $17.90 from what it was in 2025. For most Medicare enrollees, that premium gets automatically deducted from their Social Security check before it even hits their bank account. So, while your gross benefit went up by about $56, a chunk of that was offset by the higher Medicare cost. This doesn't mean the COLA was bad, it just means you need to look at your net payment, the actual dollar amount that lands in your account, and understand what's driving any difference from what you expected. If you haven't checked your payment details recently, right now is the perfect time to log into your My Social Security account and take a look. Speaking of your My Social Security account, and I'll keep coming back to this throughout today's video because it's genuinely the most important thing most people aren't using, there have been major updates to that online portal. The Social Security Administration rolled out a redesigned My Social Security portal and added a new retirement calculator upgrade in mid-2026. The interface has been updated to be cleaner, easier to read on phones and tablets, and more user-friendly overall. There's also a new retirement calculator built in that lets you see different scenarios based on when you claim and how that affects your lifetime benefit. These kinds of tools can genuinely help people make smarter decisions about when to file. But here's what you really need to know about the online account situation, and pay close attention because this tripped up a lot of people, and it could trip up more. The SSA used to have its own internal login system. You just picked a username and password and you were in. That old system has been completely shut down as of mid-2025. If you haven't transitioned your login to either login.gov or id.me, you are locked out of your online account right now. Not locked out of your benefits, your payments, your Medicare, your SSDI. All of that continues without interruption. But you've lost access to the online portal where you can check your claim status, view your benefit statement, upload documents, and manage your payment information. That's a problem, especially given what comes next on this list, because the SSA also made significant changes to how direct deposits work. In 2026, the agency moved to complete the transition to electronic payments for all beneficiaries. An executive order signed in March of 2025 directed federal agencies to eliminate paper check disbursements, and the SSA has been executing on that throughout 2025 and into 2026. If you're still receiving a paper check, you need to act. The options are to enroll in direct deposit through your My Social Security online account, or to contact the SSA and set up payments to a prepaid debit card if you don't have a traditional bank account. The SSA has made accommodations for people who truly cannot access electronic banking, but for the vast majority of beneficiaries, the era of mailed paper checks is ending. And honestly, the electronic system is better. The SSA has reported that paper checks are far more likely to be lost, stolen, or returned as undeliverable compared to electronic transfers. Switching to direct deposit means your money arrives on time, every time, without the risk of it disappearing in the mail. Here's another change that's happening with direct deposit specifically. When you update your banking information, that change now processes in as little as 1 business day. Previously, those updates could take up to 30 days to take effect. That's a massive improvement in responsiveness, particularly for anyone who switches banks or needs to update their account information quickly. But here's the flip side of that faster processing. The SSA has also added stronger security checks around those banking changes. In some cases, you may no longer be able to make certain account changes over the phone. Those updates have moved primarily online. If you're not comfortable with digital tools or haven't used your online account in a while, now is the time to get familiar with it, because the system is moving in that direction, whether you're ready or not. Now, I want to talk about something that could be one of the most significant Social Security developments in the last 40 years. And a lot of people still don't know it happened. It's called the Social Security Fairness Act, and it was signed into law on January 5th of 2025. I want you to listen carefully to this part, because if you spent any portion of your career working in a job that didn't participate in Social Security, and there are millions of Americans in exactly that situation, this law may mean you're now entitled to more money than you've been receiving. And some people who never even applied for Social Security benefits could now be eligible to receive them. Here's the background. For decades, the Social Security system included 2 provisions that reduced or eliminated benefits for certain workers. The first was called the Windfall Elimination Provision, or WEP. The second was called the Government Pension Offset, or GPO. These rules were created in the 1980s with the intention of preventing what lawmakers considered a benefit advantage for workers who had earned pensions from jobs that didn't pay into Social Security, while also collecting Social Security retirement benefits from other work they had done. In theory, the logic was about fairness. In practice, what these rules did was penalize millions of public servants. Teachers, police officers, firefighters, postal workers, and federal employees under certain retirement systems who had dedicated their careers to public service. The average monthly hit from the windfall elimination provision alone was around $350 per month. For those affected by the government pension offset, the results were even more severe. About 73% of people subject to the government pension offset saw their spousal or survivor benefits reduced to 0. Completely wiped out. Millions of widows and widowers of public employees received nothing in survivor benefits, not because they didn't qualify under the standard rules, but because of these offset provisions. The Social Security Fairness Act permanently eliminated both of these provisions. Gone. Finished. And the law applies retroactively to benefits going back to January of 2024. That means that affected beneficiaries didn't just start getting higher payments going forward. They were owed back payments covering the difference between what they received and what they should have received under the new rules. The SSA began processing those retroactive payments starting in late February of 2025. By early July of 2025, the agency had completed sending over 3.1 million payments, totaling $17 billion, 5 months ahead of schedule. That is a massive undertaking, and the fact that they completed it that quickly is genuinely impressive. So who does this affect? According to the SSA, the beneficiaries who see increases under the Fairness Act include teachers in states like California, Texas, and Ohio, where public school teachers have separate pension systems and didn't pay into Social Security during their teaching careers. It includes police officers and firefighters who received government pensions from non-Social Security covered employment. It includes federal employees who were covered by the Civil Service Retirement System, which is the older federal pension system that predated the Federal Employees Retirement System. And it includes surviving spouses of all of these workers who had previously seen their spousal or survivor benefits wiped out by the government pension offset. The average monthly benefit increase for affected workers is around $360 per month, though the actual increase varies widely depending on the individual's work history and pension amount. Some people are seeing increases of a few $100s. Others are eligible for over $1,000 more per month. And that increase is not a one-time deal. It's an ongoing adjustment to your monthly payment for as long as you receive benefits. Here's an important distinction that I want to make sure you understand, because there has been some confusion around this. Not every teacher, police officer, or firefighter in the country qualifies for these increases. About 72% of state and local public employees actually work in positions that are covered by Social Security, meaning their employers were withholding Social Security taxes all along. Those workers were never subject to the WEP or GPO in the first place, so the Fairness Act doesn't change their benefits. The workers who benefit are specifically those who were in non-covered employment, positions where Social Security taxes were not being withheld from their paychecks. If you're not sure which category you fall into, the way to find out is to look at your pay stubs from your public sector career. If you see FICA taxes or Social Security deductions being taken out, you are in a covered position. If you are not paying those taxes, you may have been in non-covered employment, and the Fairness Act could apply to you. Now here's something that I don't want you to miss, and this is a piece of the story that doesn't get talked about enough. If you were affected by the government pension offset and your spousal or survivor benefit was completely eliminated, meaning you were receiving $0 in Social Security spousal or survivor benefits, you may never have bothered to apply. Why would you? The offset wiped it out anyway, so you figured there was no point. But now that the GPO is gone, that benefit is potentially available to you. And Social Security does not go back and automatically pay you for time periods when you never filed an application. In most cases, you can only receive retroactive benefits going back 6 months for retirement and spousal benefits. So if you qualify but haven't applied yet, every month you wait is potentially a month of benefits you're leaving on the table permanently. If there's any chance this applies to you or to a family member, the time to act is right now. You can apply at ssa.gov or call the SSA at 1-800-77-21213. Now let's talk about something that affects people who are still working and receiving Social Security at the same time, because the earnings limits have also changed for 2026, and people get tripped up by these rules constantly. If you're younger than your full retirement age and you're collecting Social Security while still working, there's a cap on how much you can earn before the SSA starts withholding some of your benefits. In 2026, that earnings limit is $24,480 for the year. For every $2 you earn above that limit, $1 is withheld from your Social Security benefit. Now, I want to be clear. This is not a penalty in the permanent sense. The SSA recalculates your benefit when you reach full retirement age to give you credit for those withheld months. But it does affect your cash flow in the short term, and a lot of people don't realize the withholding is coming until it hits their payment. If you're going to reach your full retirement age sometime during 2026, a different and more generous limit applies. In the year you reach full retirement age, you can earn up to $65,160 before any withholding kicks in, and only for the months before your birthday. Once you hit full retirement age, there is no earnings limit at all. You can work as much as you want and collect your full Social Security benefit with zero reduction. These limits adjust every year, and the 2026 numbers are higher than they were in 2025, which gives working seniors a little more room to earn before they see any impact on their payments. There's also something worth mentioning on the tax side of Social Security. A new federal tax deduction of $6,000 for Americans who are 65 and older was introduced with the 2025 tax year. This deduction is on top of the standard deduction and can be claimed by both people who itemize and those who don't. For married couples where both spouses are 65 or older, the combined deduction is $12,000. This deduction is scheduled to run through the 2028 tax year. If you pay taxes on your Social Security income, and many recipients do, depending on their overall income level, this deduction could meaningfully reduce what you owe. It's not something you have to apply for separately. It comes into play when you file your federal income tax return. But you do need to know it exists so you or your tax preparer can take advantage of it. Now, I want to come back to something I mentioned earlier because I think it's worth dwelling on for a moment. The My Social Security online portal. I've said it a few times already, and I'm going to say it again because it really is the hub of everything we've been talking about. It's where you see your updated benefit amount after the COLA. It's where you manage your direct deposit information. It's where you can view your earnings record to make sure the SSA has accurate information about your work history, because errors in your earnings record can affect your benefit calculation, and the only way to catch them is to look. It's where you can request a replacement Social Security card. It's where you get your COLA notice each year, your SSA 1099 tax form, and updates on any claims you have pending. The portal has been updated with a cleaner interface and a new retirement calculator, and the SSA has expanded its availability to 24/7 access. If you don't have an account, you can set one up at ssa.gov/myaccount. The login process now goes through either login.gov or id.me, both of which use identity verification to keep your account secure. You'll need a valid ID and some patience the first time you set it up, but once you're in, everything is right there. And here's why this matters beyond just convenience. The SSA has been dealing with significant staffing reductions in 2026. Field offices across the country are understaffed, and phone wait times have gotten longer as a result. The agency's response has been to push more services online, which is actually good news for people who can navigate the portal, because things that used to require a phone call or an in-person visit can now be handled digitally and often faster. For people who don't have easy internet access or who struggle with digital tools, this shift can feel challenging. But for those who can use it, your online account is genuinely the fastest and most reliable way to manage your Social Security relationship right now. Let me also say a word about protecting yourself, because every time there's a major Social Security announcement, scammers show up to take advantage of the confusion. The SSA has been very clear about this. They will never call you and demand immediate payment of any kind. They will never ask you for gift cards, wire transfers, or cryptocurrency. They will never threaten to suspend your Social Security number or your benefits if you don't act immediately. These are all hallmarks of scams, and they target older Americans specifically because scammers know that Social Security is important and that the fear of losing that income can make people act without thinking. If you get a call, an email, or a text that claims to be from Social Security and asks you to do something urgent, hang up or close it. Then, if you want to follow up, call the SSA directly at 1-800-772-1213 or go to ssa.gov. Never call back a number someone left you in a voicemail claiming to be from the government. Now, as we get close to wrapping up, I want to pull everything together for you in a way that's actually actionable, because information is only useful if it leads to action. If you are a current Social Security recipient, the most important thing you can do right now is log into your My Social Security account and verify that your direct deposit information is current, your address is correct, and your payment amount reflects the 2.8% COLA increase you're owed. If you have Medicare Part B, understand how the premium increase affects your net payment and make sure the number hitting your account makes sense. If you spent any part of your career as a teacher, police officer, firefighter, postal worker, federal employee under the Civil Service Retirement System, or in any other role that did not withhold Social Security taxes from your paycheck, you need to look into whether the Social Security Fairness Act entitles you to higher benefits. If your benefits were previously reduced by the WEP or GPO, those reductions are gone. If you never applied for spousal or survivor benefits because the GPO made them worthless, you may now be entitled to receive them, but you have to apply. Don't wait. If you are still working while receiving Social Security and you're under full retirement age, know your 2026 earnings limit and plan your work income accordingly so you don't get surprised by unexpected benefit withholding. If you are approaching retirement and trying to figure out the best time to claim, use the updated retirement calculator in your My Social Security account. Every year you delay past your full retirement age, your benefit grows. The decision of when to claim is one of the most financially significant choices you'll make, and having accurate, up-to-date numbers in front of you is the first step to making it well. And whatever your situation, stay informed. Social Security is not a set it and forget it kind of thing, especially right now when the rules, the amounts, the systems, and the access points are all changing. The people who come out ahead are the ones who stay engaged, who check their accounts, who know what they're entitled to, and who take action when something changes. That's exactly what this channel exists to help you do. If you found today's video helpful, please drop a comment below and let me know. Tell me your situation, whether you're already collecting, planning to file soon, or trying to understand how these changes might affect someone you care about. I read the comments, and they actually shape what I cover next. If you know someone who needs to hear this information, a parent, a sibling, or a friend who's been confused about their Social Security, share this video with them right now. One share could genuinely make a difference in someone's financial life. And if you're not subscribed yet, now is a perfect time, because we're going to keep bringing you updates like this as the Social Security landscape continues to evolve throughout 2026 and beyond. This is Prime Move Guide. Stay sharp, stay informed, and keep moving forward.